Matt, the mortgage guy here, recording a quick video to talk about should I get a HELOC or should I do a cash out refi? Popular topic in 2020 where rates are historically low. People have all kinds of equity. They want to access it. They want to do fun stuff, rehab their backyard, go on vacation, do an addition, put in a pool, whatever it is, pay off credit card debt, all kinds of stuff. Before I get into that, if you like good, honest mortgage advice, please consider subscribing to the channel. Smash the like button, whether you want to or not, because it helps this information get out to more people. It's all honest, good information, so trust me, the universe wants it. So without further ado, should I get a HELOC or a cash out refinance? Now this comes across my desk quite often. As a mortgage broker, I'm a great place for a cash out refinance. I'm not the best place for a home equity line of credit. So when I talk to people and I tell them, listen, in your scenario, I do a home equity line of credit. They should know that I'm being unbiased and straightforward in my recommendation because I can't do those. I'll refer those to a great local bank, great local credit union. I've actually got some partners at a small local bank that I'm in a networking group with. I don't get any compensation for referring them over. I just know that George is going to take good care of them. So I refer them over there. Now, for you to kind of get an idea on whether or not a HELOC makes more sense, and when I say HELOC, home equity line of credit, or a cash out refinance, a lot of it has to do with two things in my opinion. One is the terms of your current loan, and two is how much money do you need? Generally, if you need less money, it's going to make less sense to do a cash out refinance, because if you talk about the pros and cons, the cash out refinance cost, you've got lender fees, you've got title fees, setting up your escrow account, all stuff getting rolled in. A home equity line of credit is a lot easier and cheaper. There's a lot less fees involved. And I can say that as a mortgage professional. There's more fees involved on our side than there is getting a home equity line of credit. It's a fact, whether you like it or not, mortgage folks. So if you only need $15,000 to get a new roof and there's no other stuff that you're doing, and you've got a $400,000 loan at 3.25%, don't do a cash out refi. There's no need to. Leave that first mortgage alone at 3.25. Go get a $15,000 home equity line, do your roof, have a plan to pay it off, and you're good. Now, in the scenario where the terms on your first mortgage aren't that great and you need a greater amount, it might make more sense for a cash out refi. Let me give you an example of that. You owe $330,000. Your current terms are 4.25%. You're looking to get out $80,000 because you're going to do an addition, a garage conversion. Your mother-in-law is going to move in with you, and you need to do that project to have her move in. Now, one, you can do a cash out refi and lower that 4.25 significantly. So it's probably going to make a small impact to your payment, even though you're pulling $80,000 out and you're improving the whole mortgage. And two, with a bigger amount like that, $80,000, home equity lines are generally variable rates. Now, even in a low rate environment, a variable rate's a variable rate. It's more risky than a fixed rate. And so in those cases, I say, it might be more risky to take out a HELOC. I'd probably do a 30-year fixed cash out refinance, take out that 80, lower your rate. You know what your payment's gonna be. You don't have to have any fear of, hey, if I don't get this HELOC paid off and rates start to tick up, my payment might go up $100, $200 a month. So those are a couple examples. There's tons, but generally, if the terms on your first are good and you don't need a lot of money, you lean towards home equity line of credit. If the terms on your first are not so good, you need a larger amount of money, then a cash out refinance makes more sense. Obviously, there's caveats and it doesn't apply to every single situation, but those are the basics. Now, like any mortgage, the best thing to do is get some advice from a quality professional, lay out everything you're looking to do, and a professional like I am is going to look at it all and say, you know what, if it was me in your situation, here's exactly what I would do. And having seen thousands of mortgages structured in thousands of different ways, usually I can tell you, hey, if I'm telling you this is what I would do, it's probably pretty good advice. So that's that. Thank you so much for watching. I really appreciate anybody who stops by the channel and gives these things a watch. Remember to please smash the like button if this provided you some value. And if you have any questions at all, I'm licensed in California, happy to help. If you're not in California, I'm happy to refer you to a broker out of state that I've got a relationship with and I know is going to protect my reputation by taking care of you. Matt, M-A-T-T, at mattthemortgageguy.com. Shoot me a message. Happy to help. Bye-bye.